Hi, this is Vijay Bambani and I'm still recording videos from my residence. I hope you're watching the pulse of them, keeping a finger on the pulse of the market. You're watching the markets keenly and deciphering the signals that the market is sending out at all times. I do fervently hope that you've joined Equity Master's Telegram channel with the handle Equity Master Official. Today's video is actually about the kind of work that I put out there, the kind of posts that I put out there, especially the late evening posts which talk about the market statistics. It also touches upon a burning question that I'm sure must be touching every trader's mind and mindset about whether the kind of meltdown that we saw on Friday, the 12th of June 2020 was in any way predictable. Was the market dropping any kind of hints that this would happen? And if it has any kind of a system or a pattern involved, can you and I as retail traders learn to read the message of the markets? The answer to all these questions, I'm happy to tell you, is an emphatic yes. Yes, the markets do drop broad hints. They don't give you a laser precise come and short me kind of a signal, but they drop you enough breadcrumbs for you to follow. You see, on the Equity Master channel, I put out 3 posts. The first one being the turnover. If at all on a rising market, the turnover is higher, which means the buyers are actually keen and therefore participating in the market wholeheartedly. If on the other hand, turnover is increasing on a day that the market is down, that tells me that the selling pressure is actually stepping up. In the run-up to the decline on Friday, 12th of June, I noticed that rallies were on poor volumes and the declines were on higher volumes. The open interest build-up, which is the number of transactions that are open in the derivative space but not yet squared up, was rising every time the markets fell. And when they rose, the open interest was either rising very, very insignificantly or even contracting. That tells me that the insiders, and remember, as long as there are money markets, there will always be people in the know, insiders. These guys, if we were to track their money trail, and believe me, the best part about digital markets, computerized markets, is that every trade leaves its footprints in the sands of financial markets, because all the numbers are there in the open, high, low, close and the snapshot window of your trading terminal. So these guys, the insiders, have left enough trails for us to do a forensic audit or a post-mortem of the numbers and say that yes, these declines are predictable. The other post that I put out is the basis. Now the basis might sound very complicated, but let me cut out the jargon and tell you what the basis is. The basis simply means the difference between the spot and the future. Since the last couple of weeks, both the Nifty and the BSE Sensex, the Nifty and the Bank Nifty were showing the futures to be quoting below the spot price, which means the basis was inverted. What the old timers would call undha badla or backwardation. If the Nifty was rising, which it was sporadically off and on, why was the basis inverted? Which means the insiders knew that there was a fall coming, and on rallies they were hammering the markets. The third post that I put out there is the top 20 counters in all categories, highly volatile counters, the gainers, the losers, stocks where open interest is going up, stocks where the volumes are higher. I noticed that the Nifty and the Bank Nifty were always present in the top volatile counters, which is not normal, nor is it healthy. So, which told me that there was an acute amount of nervousness in the broader markets, which is not conducive to a sustained bull run. Which is why there was a very sudden, very sharp, and very pronounced deep decline on Friday. So, had you basically followed the Equity Master channel on Telegram, you would have seen in the run up to the decline how the statistical data was basically dropping breadcrumbs, hints, broader kind of messages to you that the market was walking on a slippery slope. You know, just as birds talk, as a matter of fact, chirp, human beings talk, other animals talk, the markets also talk. The point is that the language of the market is in numbers, is in statistics. If we were to get a little more statistic savvy or mathematically savvy, we would be able to hear or decipher the message of the market. So do remember, my friends, that markets talk. Ask yourself the question, are you listening? And if you are not, who do you blame other than yourself? I do hope that you're joining Equity Masters Telegram channel and you're going to be reading my posts every evening. I'll look forward to seeing you there. And before I sign off from this video, let me remind you to click like on this video in the comments section. Do let me know what you think of this video and what else you would want me to record in my next video. Do not forget to recommend my videos to your family and friends to help me spread the cult of knowledge-based investments. With that, I say goodbye till we meet again in my next video. Do take very good care of yourself, your health, your trades, and your investments. Thank you for watching. Vijay Bambani signing off for now. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.